Hello guys, this is fairbinaryoptions.com and we are looking at the Australian dollar US dollar 4-hour chart, or the AUDUSD. The reason why we're looking at the Australian dollar US dollar is that the move that you're seeing here to the downside seems to be impulsive. The reason for that is the complex combination form that we have for the possible second wave here, and I would say that this is just the end of this, let's say, either a double three running or an irregular flat. I would say that most likely this one is a double three running. It implies way lower values than the ones we are looking for. It is 0.9506 here, and it implies something like, let me check, Fibonacci expansion from the absolute highs till the end of the first wave here until the end of the second correction here. And normally this should come 0.9381, so way lower values. This is being called a double three running. It is almost always being followed by a powerful extended third wave move, and this should be labeled as a first wave to be here, a second wave normally to be here, and now we are looking for a third wave to the downside that should extend again more than 161.8. So that would be the minimum target for this trade. So 1, 2, and 3 to the downside to come, 161.8 implying 93.73. Of course, that the logical thing to do here when you trade binary options is to engage into buying puts, and this is what we want to do here. So we are buying puts, buying put options for end of month, and that would be this Thursday expiration date. And the reason for that is that we and not choosing, for example, the end of week or Friday expiration date. The reason for that is we want to avoid a possible bounce after the month end flows go on Thursday. We want to avoid a possible bounce to come on Friday, trying to squeeze, let's say, the weak bears. For that reason, we're looking for the third wave, and typically such a price in an impulsive move should go and extend with the third wave way lower than 161.8. So it should come something like this. In an impulsive move, it should come something like this, and then to retest the 161.8 or something like this, and then to go for the final target to the downside, something like this in a five-way structure. Anyways, it implies lower values to come. Whenever you trade binary options and you are looking for lower values to come, then you are looking for buying puts at the expiration date. This Thursday, today is Tuesday, so this Thursday at the expiration date, we want price to be lower than the striking price. Striking price is the price you buy the option for. Remember, when you trade binary options, you have only the possibility to buy. If you buy calls, you're looking for price to be higher than the striking price. And if you buy puts, you're looking for price to be lower than the striking price. In our case here, we are buying a put option on the Australian dollar, US dollar, with the hope that in the end, at the expiration date, is going to expire in the money, therefore to be profitable. This double combination here cannot be labeled like A, B, C. It is not correct, but it should be labeled as this one here to be the first correction. The move to the upside here to be the second correction, and as you can see, it is making a new low. So it is making a new low when compared with the previous one, but with a corrective wave. And the third correction to the upside is this one. And by the time the third correction is done, so basically this is a first correction, the intervening X wave, a second correction, and then a classical run out to scare all the bulls. This is how this setup goes, and this is how this one should be labeled. Such a double three running, it is being formed out of three, as you can see, different corrective waves. Two that go in the opposite direction than the one of the prior trend, so in the opposite direction. one that goes in the same direction as the prior trend goes, and there you go. This is our setup. Thank you very much for being here. This is fairbinaryoptions.com. We are looking now for a third wave, a 5-way structure on its own, on a lower degree, on the third wave to come, with these lows to be touched. Normally, until the end of month, the expiration date, we should have such an outcome. Until next time, stay safe on the markets. Bye bye.